Hey YouTube, this is Brady Watkins with Leverage Wealth Management. Hope you guys are doing well. I'm excited because I am back again to do another semi-quick video about going through policy illustrations, how to read them, and how to figure out if they're going to address your needs the best. So we get dozens of questions on how to read policy illustrations. We review policies for clients, and now we're going to go through step by step what we look for in a policy illustration, and we're going to point out specific things of what you should be looking for, because we get a lot of people asking how we read them and how we figure out whether or not it's going to be a good fit or a bad fit. So without further ado, I'm going to go ahead and bring up a sample illustration, and we are going to go through that as quick as possible. So before we get into this video, I want to really quickly define and just really start from square one what a policy illustration is. And what a policy illustration is basically a hypothetical ledger that shows exactly how a policy might perform under many different circumstances and outcome. Now, this illustration can be comprised usually of 15 to 40 to 50 pages. Typically, it's a lot of complex text that does, however, follow a general format, although it might look different with every carrier. But there are guidelines established by regulators for these illustrations, and even with these standardized formats across the board in this industry, these policies can get really difficult to understand. So there are just a handful of things that I want to highlight on how to read these things in order to make it as simple as possible for you. Now, what I have pulled up here is a Symetra policy, and Symetra, along with the rest of the industry, again, has a guideline based on regulations that they have to include in the illustration. However, it is not going to look exactly like this if you are dealing with a different carrier, but in general, these policies should say the same kind of thing. So the first few pages that we see typically is the general information on the company, the benefits of an IUL, a list of riders that are on this policy, and typically after that it's going to be the indexing options, and we can go more into that once we get there. So those are the four things usually, comprised of the first 5 to 10 pages that you're going to see. This first page for Symetra is going to be about the company, about the CEO and about all of the historical backing of this company. The main thing that we want to see in a company is it being A-rated. Now, the reason we want A-rated is pretty self-explanatory. We only want to go with a carrier that has historically been doing this a long time, that has a good backing, and usually they'll have it listed in these first few pages here. So in terms of the information on the company, you can read as much as you'd like, but the main thing that we want to look for is making sure that this company is A-rated. The next page here is the actual product information here. The Symetra Accumulator IUL is the actual product that Symetra is providing here. This is a quick outlay of what an IUL is. And you want to make sure, obviously, that your name is right here. This is obviously for no one in particular, but you want to make sure that all your information here is correct. Going down to this next page, this is going to be on every single page going out from here. So this is going to be your general information, how much premium you're putting in, what the starting death benefit is, and what your rate class is projected to be. Typically, the carrier is going to have the state of issue either at the very top or at the bottom right here. So at the top of this page, you're going to see the listed benefits of the IUL. Now, this is pretty standard across the board here. It's going to say something about life insurance offering flexibility and death benefit protection, along with usually income, tax-free, all of those dynamic words that are used to sell these products. What this company is doing is going right into the indexing options. We're going to skip down to look at the rider information just really quickly. This is going to be also standard on every policy here. The benefits information, so you can read at what this policy is providing you. There are a lot of different riders, a lot of different benefits for each product. This is where you get to read up, see if this is going to be the best bang for your buck, if it is meeting and addressing your goals. This is going to be where you can really see that, really see what is added to this policy. So those are going to be across the board the general things in the first few pages of each illustration. Just to recap, the main thing you want to see in these first few pages, read up on the policy riders and benefits to see if it's addressing your goals and needs for the policy, and also making sure the carrier is A-rated. That's the most important part of these first few pages. And also making sure the general information about your policy is correct, your name, premium, initial death benefit, all of that. And so getting into the next section here, the index strategies is typically the next thing to be seen on these policies. This is going to go really in depth in the different kind of index strategies. For this Symetra product, it has 9 different policy indexes for you to choose from. It's going to go through each one. So typically this is just the area where they are describing and introducing the different types of indexes. The next page down here is going to be the actual indexing credits. And I will say that once you get to this portion of an illustration, this is really where comparing carriers and different indexing strategies really comes in handy, because if you aren't comparing, you're reviewing this in a vacuum. You have no idea what the other carriers are offering. You don't know what the industry averages are for caps, participation rates, all of that. And so it's really important to compare so that you're not viewing this in a vacuum. So what do we really need to see here? That's a good question. You need to figure out basically 3 things, and 2 of them is going to be based on comparing to other carriers: caps and participation rates, and historical performance of these actual indexes. The third thing you need to see here is, do any of these index options require an asset-based charge? In order to do that, you need to do some digging. Sometimes they really hide it well, and that's the case here for Symetra. You're going to have to go back up to the introduction of these policies, and what you're really looking for here is where it is talking about charges or additional costs in using these indexes. And so for this select strategies, these 3 select strategies is going to be available at an additional cost and a additional charge. And so this is saying the same thing. It's basically saying if you want to use these indexes here, it is going to cost you an additional charge, an asset-based charge. Usually this also comes with a potentially higher upside or a bonus, but this has to be said and figured out at the beginning, because obviously you want to know everything about this policy. Be looking out for the additional cost in this policy. There are lots of agents that are going to potentially sell you on a index option or an illustration that selects that higher bonus for an additional charge and never ever explain the fact that it is charging you an extra cost for that potential credit there. And so really those are the 3 main things we need to look at: the caps and participation rates, the historical performance, and the indexed charges based on the different index allocations. The next thing to see your hypothetical returns by your strategy. This is going to be standard across the board with each insurance carrier. They're going to go through the historical performance of each index. Some of these indexes don't have a long track record, meaning they started 10 years back. That's okay. And they usually show you 10, 20, and 25-year averages here for each index here, so you can actually see historically how have these policies performed. This is really important as you're choosing your indexing options, and it really is telling on which index option this policy is being put in. And that's the next thing we want to see here. Down the page, you should be seeing where this policy is actually being allocated to. So this is the page that shows you what your money is being allocated in, or at least being projected as. The S&P was the chosen index. 100% of the money is being invested into this specific index. And just a side note, this is another place where you can see if this policy is being invested in those indexes with the asset-based charge. If the policy was invested into those select options, you would be able to see it right here. The next thing I want to highlight, which is really important, is the MEC status of the illustration. Now, every carrier has to define MEC and go through the IRS 7702 rules here and basically determine whether or not this policy is going to be given the status of a MEC or not. And so you should be looking for a non-MEC status, and based on this blurb right here, this is not going to be a MEC. That is the only thing that you're looking for if you're hoping to retain the tax-free nature of this policy. You have to make sure that it explicitly says this is not a MEC if the policy is followed according to this illustration. Now the next page highlights the different types of loan provisions in the policy. Now we've already done a full video on this. It's another very quick and easy to understand video. I'm going to include it here so that you can go and watch that. I'm not going to spend a ton of time on it, but feel free to go there when you are ready and watch it as many times as you want to understand what the loan provisions are in the policy. And as we keep coming down to the next page, this is a very familiar page that is also going to be across the board on every illustration. Just a very quick overarching view of the ledger of the illustration, 5, 10, 20, and 25 year snapshot. It's going to also include guaranteed and a non-guaranteed ledger. Now, as we get to the actual ledger of the policy, I want to quickly define this guaranteed column. And to make it really simple, Symetra basically sums it up here as a 0% interest year over year. And so for simplicity, we will just keep it at that and say that this is a policy that is generating 0% interest year over year. And so obviously this is the guaranteed because the IUL has a guarantee of a 0% floor. The actual non-guaranteed is going to be a 5.7 illustrated rate. The important thing here is to know that these illustrations have to be shown based on historical performance that you can see, that you should be able to look and see what are they illustrating at and what is this policy, specifically the indexes that they've chosen, performed historically over the life of the index. So let's go ahead and look at this. So this shows you the hypothetical performance at a 5.7 illustrated rate, putting in $40,000 for 20 years and then starting to take out income in the 21st year. The big thing that you want to see in these policies is obviously the projection of the income that it's illustrating, and also making sure that this policy does not lapse before its maturity. A lot of times we get IUL illustrations that show really good income but happen to lapse around year 100, 110. Just for simplicity's sake, we want to make sure that your policy is lasting at least until 115. Usually carriers mature at 118, 119, 120. But just for simplicity's sake, we want to make sure your policy is lasting until 115. The next thing we want to highlight here is the details of the policy charges. Typically, if you don't have this included in your illustration, you can ask your agent to provide a copy of that so that you can see what you're being charged, what the rates are on this policy, and whether or not, again, this policy is going to be a good fit and also designed efficiently. There is a video on policy charges going through all the different kinds of charges. I'm going to include that video here so that you can branch off, look at that, and view that in detail. And as we're getting towards the end of this policy illustration, the last thing I want to go over is this policy overview. We've highlighted this in other videos. This is the place typically that you can see the 7-pay premium, the guideline single, the guideline level. You also see that the policy is not a MEC, another way to see the MEC status of this policy. All of this information is going to be really helpful for you to see and compare with other carriers and illustrations if this policy is going to be the best bang for your buck, if it's designed with your goals in mind and efficient. One more thing that I want to highlight here is the no lapse guarantee premium. A lot of carriers call it a minimum premium. The thing that is helpful to know about this premium is this is the minimum premium needed to keep this policy going. And also, if you are seeing that this premium is anywhere close to the plan premium that you are paying, this policy is not designed for maximum cash and income. This policy is designed for max commission. So those are the basic things of how to read a policy illustration, how to see if it is going to be set up well, and if it's going to be in your best interest, not the agent's best interest. Hopefully this was helpful for you guys. I'm going to include a link below to our website. You can feel free to send in a policy for us to review, or you can book some time with us if you have any kind of questions. We'd love to help in any way we can. Looking forward to talking with you guys again soon, and take care.